take a look into the Australian dollar here. Going through the currency pairs. Got 4 up on the chopping block in the monthly. And luckily, the Australian dollar comes first in the list, so we can kind of see how the Australian dollar is approaching the whole world. It's everything against that, which is kind of easier than some of these other pairs where the euro comes before the yen and then the dollar goes before the yen. The dollar really doesn't have a mate outside unless you run dollar yen, dollar CAD, dollar Swiss. But everybody's afraid to put the dollar Swiss on the table because of the one of these moves, but a little bit bigger. And so that's kind of just, of course, here it wasn't no picnic either for this wick here, 400 pip wick on the monthly Australian yen. So every currency is capable of, like anything can happen. Like the Australian dollar here, just taking out this low here. So let me just clear this guy off, start over and realign these and just do a quick and dirty analysis. I think the only way to do it is, people say screen time, but I would have to say if you don't see it in the first millisecond, like when you're driving down the road in your car, you pretty much if a ball jumps out in front of you, you don't actually see that ball. Your retina is connected to your nervous system, so you just immediately jolt, you immediately hit the brakes. And this is what happens when you're trading. Unfortunately, the call to arms or the call to bail or the call to get in is triggered by the, I suppose if you're a risk taker, it's the dopamine of risk, of the probability of winning, And, this is certainly the monthly is gonna slow you down. Like that one guy said, it's gonna slow you down. Slow down, people. No hurry, but I think the Australian New Zealand is turning around. This one has the most beautiful looking kind of, this would be the 5th wave. Here, 3rd wave. Here, it's in a triangle, right? So right off the bat, I would say just the most idyllic pattern. This one, kind of wacky. Real harsh. In a 3rd wave, possibly 3rd wave, this is a beautiful extension that's very symmetrical. From this fallout point here, and then come down, just run your channel this way to save yourself having to draw another, because now you got that perfect interval. This is the 50%. So you don't have to whip out the Fibonacci tool necessarily. You've got a nice, I would say a proportion tool as opposed to telling the market how many percentages it needs to be offset. And here's the beautiful double bottom on the Australian to US. And again, this is 100 pips per bar. This is, if you're going to do an Andrews pitchfork, here's the internal window. So you're always looking for triangles and reversals coming off the center of the down stairway. And this is a wonderful triangle. So the strategy here is going to be different than the strategy here, typically because of the nature. This is actually a little bit more tamed down market. Definitely thinking more range. This is still in the midst of forming a triangle, and it's the interesting thing. It's just below this. This would be the target for the bulls as they come up back into this. And there was the beautiful top, became a bottom. So you just kind of run through whatever is currently around you to buy and sell, and then just from a pure stairway standpoint, here's your bottom. Look how they just came down and just tried to tag into that little zone there. And this is the ultimate bottom. And here's another bottom hidden back. You don't have to go this is 3 years of data per panel, so I don't think you have to go back further. You always can for kicks to see this beautiful triple bottom here. But yeah, double bottoms do exist. People just, so funny they say that stuff like, oh, never pick a bottom. Well, why not? I mean, you knew this bottom, so you could pick it. It's actually, I guess it picked itself. And here's the beautiful triple bottom becomes a top, becomes a bottom, becomes a bottom. You just gotta wait like a year for each trade. You just gotta wait a year, right? I mean, you may just, come on, you may not be around for it. Wow, that's yen though. Yeah, yen looks like it's just gonna get clobbered by the Australian dollar, and so I'll do the channel, and then well, we're at a big fragile point here, so let's try to get a little more precision out of that. Just cue this thing up. I want to pull this into the center point and get that beautiful, it's like a channel envelope. And let's find the top. I guess you have to drag it into here a little tight. Capture most of that. And now let's turn off the, let's fix the scale so we can drag the whole unit. Here we are. Now we can see the where all the value zones are. So you definitely want to be buying down here. Obviously, it's a buy low, sell high. Unless you're going to get in on the next, like if you want to get along this thing, it could pull back 50 pips. It could easily come back a little bit, and then the down stairway. I think this is still going to retrace some more. Of course, you're always going to want to drop down the smallest time frame you can possibly manage mentally. But if you are gonna go from monthlies to dailies or hourlies, have a reference of price. Now it looks like a train wreck in here like this, but still that's like here's there's a 1,000 pips, right? 1,000 pips of Australian dollar, and at this level of view, it's a wacky, steep. I know for the people that are expecting to see all that data behind them, as if they were reading a book and they had the whole story in front of their head as they had it behind their head. Problem is that you don't need to know about that if you realistically realize that you got 24 chances to 24 possible pivot turns every day, and you just have to wait for them to appear on the hourly. Then you're really going to just sit tight, and so everybody's about the same price here. You just queue up all the bids across the board. And unfortunately, MetaTrader can't just jump to the grid. You gotta like manually drag this crap. And you get that set up. And now you can drop down time frames. Because now that you're at this stage of zoom, and you can see historically back here, this bottom is a bottom here that it bounced off of, and then it just crushed through. But that'll be the new sell point. Typically, market seems to be attracted to a price that it feels comfortable at, like 95 cents here. Psychologically, people get their brain around 95 cents real good, and the longer it stalls at 95 cents, the more chance there is for a triangle to form and a decision to be made. There's always the breakout and the pullback, and then you can get in. So if you're getting in at the on the pullback, which is wave 2, if this is 1 and this is 2, 3 is the biggest wave always. If you, in the most basic terms, Elliott wave really is just about wave 3 being the biggest wave. And that's really what it's about. And wave 4 always being a triangle or a correction or a drift or a, if you don't know what it is, it's wave 4, right? So, and the market spends 80% of the time in wave 4, right? Range trading. That's just how it is. I mean, it's not, no offense against the guy that's counting ABC waves, but B is going to be C. Wave C is the biggest wave out of the ABC. And the so you could always make the argument for an ABC. ABC, or an ABC would be the correction. So it looks like, what's that look like? Well, you don't really see it, I guess. It's pretty subtle. I don't see it in there. That's the problem with the Elliott wave. You have a hammer, you're looking for a nail that's a curved nail. Not a lot of bent nails out there. So, and if you just have good money management, for God's sakes, if you're on the long side of this in any manner, wave, or form, even if you got stopped out here, you probably get filled if you have buy stops running. But if your bias is the upside, you got killed here, or at least you feel like, wow, is this thing going to come back to life? Of course, that's a monthly, but this happens on a 5-minute chart. It actually looks like the news just came out on a 15-minute chart, and that's another thing that you can see in here. So yeah, it's definitely the downtrend here, and then just if you're gonna start at this monthly aspect ratio, then always keep coming back to the, now we'll go to the weekly and close it out with the weekly. Let's try to cue this. That's not the perfect. So yeah, this is a really rangy situation, and then we'll just try to fold it back to the weekly, and next week's coming, I think. They called it off, so tomorrow evening the market's going to open, and looks like the first point this is going to come to is first target for the upside is this. On this one, here's the double bottom. Always looking for double bottoms and double tops. Very, very cliche. Market's very cliche and pretty lughead. Not a lot of. It's so stupid. You don't need to be very intelligent to do this, unfortunately. So it's not really impressing anybody. Typically, if you can make money trading, apparently nobody really cares, right? Double bottom becomes a top as long as you're paying the bills and people are depending on you to pay the bills, right? Here, if you trade the outliers, look at these wicks. Look at this shadow of almost 100 pips. Wow! And if you're gonna play, this is the weekly, so on the daily, I'm sure this could be a beautiful double bottom, or at least on a 4-hour. And then we just kind of, if you wanted to test yourself on the fly, see how good you are at that kind of thing, right? It's pointing the wrong way, but I just want to mark it so when I zoom in, I don't lose the reference point there. Okay. So it looks like it's now the 4-hour to the weekly is supposed to be a little bit more. But here, this is that week of. Now let's see if I can't find the top bottom in there. Yeah, I don't know. Just you just have to trade a lot if you're a scalper. You can't really. Here's the double bottom became a top, kind of on an angle there. So that would be like the last rejection of that area. Then down again. And this is where your outlier orders, where you just, because realize this is a whole week of data here. So look at that retrace and look where it comes back to, just dead on. I mean, crazy, right? Look at that. Bam.